What's going on, guys? It's GBP baby. Welcome to another video. It's currently 11:53 p.m. on Sunday the 17th of September. I'm going to jump straight into the charts, and I do want to talk about the commitment of traders. Now if you type in on Google commitment of traders barchart.com, you'll be able to access that kind of data, which is what we see below here. You'll be able to access that on barchart.com. This is Dixie's commitment of traders report, and the red line delineates that. So I recently watched back on ICT's video on the commitment of traders, and he was explaining how it tends to do with commitment of traders. You can identify certain rallies which are likely to be fake or faults, in terms of a false rally in order to trick retailers. Or anyway, yeah, he was talking about that, and I was looking at the data, and just to make it more clear, this is below the zero line. So with the commitment of traders, let me just make this more clear. So here's the same chart, but I've expanded it, and you'll see this line here, this grey line delineates the zero level. Now when the commitment of traders line is above that zero level, it assumes that we're bullish. When it's below the commercials and the big banks and the big money, which is this red line, are bearish. Now it's not as simple as it being bullish and we only buy, and then bearish and we only sell. It's not like that, but it shows what the interests of the commercials are, and you can see for a long time we've been below this zero line, suggesting that overall there is a bearish pretense. And even though there's bearish pretense, you can see here we've been rallying, so that shows that there's obviously rallying, and there's obviously kind of rallying, buying going on whilst we're in that selling in the bearish condition anyway. So I rewatched a video, and he explained how you should look back 6 and 12 months to see where you are in comparison. So if we look back 6 months from the beginning of September, we have two months from September to June, 2 months here and 2 months here. So then that takes us to the beginning of December. Is that right? 2, 4, 6, yeah. So that should take us to about here. And what he was saying was you should delineate that and then split it to see, and then create a range within the commitment of traders, which is quite interesting. So I'm going to do that now. Oh. This might be going right over your heads, guys, but there's a reason I'm doing this. So we should mark out the high and the low of the past 6 months. So we go September, so we got August, July, and then June, and then before June we got May, April, and March. So really we should be only going to March, so let's just move that here, and then we have a range delineated. And he was saying that there's ranges within ranges, and because of this, sorry guys, I've never done this before, as in pasted. I've never done this before anyway. You should delineate the 50% level, and again you should treat this now just like you would treat anything else, in terms of, above would be bullish and below would be bearish, premium and discount. Now what I've recognized is that we've recently had this dip in the commitment of traders. Yes, we're below the zero level, but within the past 6 month range we've also had this significant dip away from a key level, because we were at this, last time we were at this level wasn't since 2021. And seeing this dip makes me think that there's a possibility that we might see a reversal happening soon, because it shows that they're not, although we have rallied and we've been buying, and you can see that in Dixie, we've been buying, we are still bearish, because one, we're below that zero level, and two, we're at a key level where a reversal would be anticipated to happen. This is all explained in his video, but I just wanted to point that out first before I start weekly review, because I'm going to start on the monthly and I want to show you something. So I hope that makes sense. So you can see we've traded to the consequent encroachment of this wick, and let me just shrink that. And Friday's price action didn't do as I anticipated. I was expecting a large expansion on the Friday. I was very convinced. How do I change the size? I was very convinced that I was going to see a large expansion on Friday, but that was not the case. And it kind of just stopped and consolidated at the 50% level of this monthly wick. And now with that in mind, it's at the point where if we are to be bearish, price shouldn't be trading into this massive monthly fair value gap anyway. So if we are to remain bearish, this should stay open, which means that I'd want to see price start to turn around here, or it can trade into it. So it's like, at this point, I don't know. I want to see what happens on Monday to get a better idea. But yeah, I just wanted to mark out this consequent encroachment to show that we've traded to it now, and that there's potential, especially with the commitment of traders taken into account, that we might see some kind of reversal. Let's drop down to the weekly. Here you can see we expanded. I wanted to see if we could run into these relative equal highs, resting here and here, but we failed to do that. We have taken out buy stops here already, so this buy side liquidity has been grabbed. That's one thing to take note. So it's not like buy stops haven't been grabbed, but whether it wants to actually reach above these relative equal highs is going to be interesting. Let's go to the daily. You can see how Friday didn't expand. It kind of just, it never even took out Thursday's high. It kind of just stopped, traded down, touched this order block, and yeah, now we're just at that point where we're waiting. Now it's possible Monday might want to expand higher and run up it towards that fair value gap, but also, you know, conditions like these, I wouldn't be surprised if price also broke down. So yeah, last week was pretty interesting. We pretty much consolidated the whole week and then expanded on the Thursday, ran up to that consequent encroachment I was talking about on the monthly, consolidated a bit more. We haven't traded through it yet. If we trade through it, then I would anticipate these highs to get taken out and for that fair value gap just to be reached into. Other than that, I'm just gonna stay out. I'm gonna stay out of the charts in general, because yeah, it's not really the best of conditions. Because these relative equal highs, this is buy side liquidity and there is a imbalance there. So let's just mark out the imbalance as well. I'm going to make the imbalance yellow, and I want to see if price can reach into that in the new week. To be honest, I shouldn't be bearish until I see a break in market structure, and I haven't seen a break in market structure yet. But I do think that after we take out these highs, or very soon, we are going to see a break in market structure and a reversal within DXY. So that's why I'm being a little bit more cautious. And again, with that commitment of traders report and seeing, you know, that significant dip happening, I do want to be a little bit more wary in general of what's to come. So what do I want to see this week overall? It would be nice to see an expansion higher and then to start moving lower. It'll be interesting to see if Monday or Tuesday can make the high of the week within this volume imbalance here in yellow, and then I'd expect some kind of reversal or aggressive push downwards. Plus we have the Fed rate announcement, so that should move the markets quite a lot. But yeah, I just want to let you guys know I am very weary and expecting some kind of reversal very soon. So let's go to GBP. We'll go with the monthly as well. Now with the monthly, we can see how aggressively bearish this month has been so far. If we are to continue higher on dollar, that means we should be anticipating lower pound as well. So I am going to mark out this opening of this bullish order block on the monthly, because this would class as a discount PD array. So we might want to trade into that, which would then cause a reaction, which would continue allow us to continue higher. So I'm going to mark this out, and I'm also going to mark out the mean threshold. Six, make that dashed, and we'll call it m.t, and that's mean threshold. So in terms of pound for the rest of the, well, not the rest of the month, but for this week, I would like to see if we can reach that bullish order block open, where I'd want to again see some kind of reversal within the market, but I don't want to speak too much yet, especially with the Fed announcement and such events happening this week. So you can see we've had a lot of down weeks. We're just pushing down to that open. We do have an inversion fair value gap here, delivered on the downside, traded through on the upside, so now we should expect this to act as support. So let's write inversion fair value gap. I'm going to make this one orange. And then on the daily, there's not really much to see really, but overall I do want to see if we can take out these lows here. So there's sell side liquidity resting below here that we'll keep our eyes on, and then after that gets tapped, I'll then wait and see if we can see and wait for an expansion higher and see if we do want to start running back into premium. So yeah, overall I'm aiming for here, not really much. Like I said, I wouldn't be surprised if the low got made early in the week and then we started to move higher from then on, but again, you know how I usually go. I like to wait for Monday's trading, especially in conditions like these when we've just been falling straight for like the past how many weeks, like 3 weeks, 4 weeks. It's been very crazy, but we will stay tuned. Finally, let's look at EURUSD. Go on monthly. Now EURUSD's monthly isn't as, seems a little bit more weaker than GBP's. In terms of sell side PD arrays, there is this fair value gap, but this, if we're bullish, this should remain open the same way that bullish fair value gap, that bearish fair value gap on DXY should remain open. So I'm not really expecting price to want to reach all the way down into here. However, we do have a breaker block here, low, high, lower low, and we've traded through it. So I am keeping my eyes on this range in general right now. I'm going to mark out the 50% level of that, and I don't want to see price break below this low, or realistically below the 50% level, but this should, what I'm saying is that this should now provide support, because when a bearish order block, which it is, becomes a bullish order block, once it's traded through, it should continue to act as support. So although we're trading back into it, we should see it provide support. And then if we drop down to the weekly, you can see we're running lower. It does look like these lows may want to get tagged. When it comes to Euro, again, I'm not the most confident in general right now, so I don't really want to say too much. We have this long wick here. We can mark out consequent encroachment of that. Price may want to trade to it. To 0. Make it black, and we know that that's the weekly consequent encroachment, so let's just write that out. Excuse me, I'm very tired, guys. Also, we hit 500 subscribers. Thank you so much, guys. I appreciate it a lot. And then if we drop to a daily, we can have a better look. But yeah, I guess it's just a matter of waiting. We'll see how Monday trades as per usual. I do want to see us reach lower one more time, but like I said, I am anticipating some kind of reversal if I'm looking at the commitment of traders charts right. Now, this is the first time I've actively used them, so I don't want to like make any promises or anything, but it'll be interesting to see how price trades in accordance to those charts. So that's pretty much everything, guys. Overall, I also want to see Euro trade down to this weekly consequent encroachment and 50% of that monthly breaker block. We've got GBP that I want to see trade down to the inversion fair value gap, taking out this sell side liquidity and into this bullish order block open on the monthly, remember, where I expect a reaction. And then with DXY, as I stated before, is this the wrong chart? My bad, guys. I should use the TVC. But with DXY, I want to see if we can take out these relative equal highs, and see how it treats this consequent encroachment in general, to be honest. And I'm going to keep an eye on the commitment of traders report, because like I said, if I'm reading it correctly, we should be anticipating some kind of reversal or large expansion lower on DXY sometime soon. That's everything, guys. Thanks for watching. Don't forget to like, comment, and subscribe, and I'll see you in the next one. Peace.